Question number 3. Question number 3, following is the trial balance of X, and subject to these adjustments we have to prepare trading and profit and loss account and balance sheet after passing adjustment entries. Now I am going to pass the adjustment entry for the first one. Stock were lost in fire accident 500, which was insured. An insurance claim was admitted for rupees 400. For abnormal loss, the journal entry is profit and loss account debit and to trading account. Okay. The value being 500 rupees. If it is insured, any claim receivable will be also passed as an entry, due entry. As such now not received, so due entry will be passed. So 400 rupees is receivable. Insurance claim is an income, and receivable, as it's a outstanding one, outstanding income receivable, the party name should be in the debit side. So second, outstanding insurance claim account debit to insurance claim. Of course, that insurance claim ultimately transferable to the P&L account, so you can directly post that to the P&L account. That way also you can do. Or you can do two entries like outstanding insurance claim account debit to insurance claim, and later that insurance claim can be transferable to the P&L account. Both the way you can pass. Is it clear? So I am going to pass the adjustment entry and directly I am going to transfer. Because of that reason, the insurance claim journal entry is passed this way: outstanding insurance claim account debit to insurance claim. The ultimate transaction will be that insurance claim will be transferable to the profit and loss account. So okay, insurance claim account debit to profit and loss account. That's how you can pass the another entry. The value being 400. Though 500 rupees lost, we recovered 400 rupees. The difference between these two, 100 net loss. Second part, goods were sold on sale or approval basis 500, on which customer's approval still pending was for rupees 300. Mr. X marks up at the rate of 20% on cost. Any sale, probably in the case of credit sales, the entry will be debtors to sales. But if it is pending approval as on the year end, will be considered as not sales. You have to reverse that entry. The sale entry will be reversed to the extent of approval pending. Here the customer's approval still pending was for 300, means you have to reverse to this extent of the sales. Yes, what is the journal entry for that? What is the journal entry for this? Come on. Journal entry for this. Yeah. What is the journal entry? Sales, reversal of sales. So sales account debit to debtors. It is not sale because still approval is pending, so we should consider this not being sale. 300. But don't forget the cost price of the goods returned, because closing stock is usually physically verified by verifying in the godown. While verifying, these stocks is with the customers not available. So this is similar to the closing stock like. So closing stock usually credited in the trading account. The same way I am going to credit here. Okay. Stock, closing stock. Rather than naming this as a closing stock, I name this as stock with customer. Or you can simply name this as closing stock. No harm in that. To differentiate that stock available in godown as well as stock available in the customer. As it is not sale, the stock is not the customer's stock. It's our stock. So you have to bring it back to the asset side of your balance sheet. And by crediting that in the trading account, you are able to find out the real profit. So trading account. stock with customer account debit to trading account. Here the markup value, stock will always be recorded at its own cost. It's a markup value. Markup at the rate of 20% on cost means if the cost being 100, profit added is 20 on this. Profit added on this is 20. And then the sale price should be 120. They have marked up 20 rupees extra than the cost. The sale price is 120. And here 300 rupees worth of goods means sale item remains pending approval from the customer side. So it is not sale and it's my own stock. Stock should be valued at its own cost, right? So as it's a cost, you have to reverse this. What about the cost of this 300 rupees? Come on, tell me. You can do the cross multiplication this way. 300 into 100 by 120. Come on, get me the value. Yes. How much is that? 250. Am I right? To that extent, it will be considered as stock with the customer credited in the P&L trading account. So 250. 250. And the next one is manager is entitled for a commission of 10% on profit after charging such commission. So manager's commission should be payable. 10% on profit only. So we have not found out the profit. So we cannot work out that now. We will work out that later. But now we can pass a journal entry for the commission payable. It's a commission outstanding. Expenses outstanding is simply expenses to outstanding expenses, similar to that one. It's also an expenses but manager's commission. So I'm going to write here fifth manager's commission account debit, manager's commission account. But I'm not aware about the value now because unless I can find out the profit, I cannot find out the 10% on that. So you keep it pending. Pass a journal entry and keep the value to be posted later. Okay. Manager's commission account debit to outstanding manager's commission. We have to calculate now only. So it is as such now we supposed to calculate. That's why it is called as outstanding yet. It's not at all paid. Is it okay? Then the last part here, the fifth one, this where we have to find out the manager's commission and then we have to post here. So as such now value is not available. So I just pass the entry only. Manager's commission account debit to outstanding manager's commission. The following transactions were omitted while preparing trial balance. Goods taken by owner. What is journal entry? Drawings to purchases. Goods distributed as sample. Sample means advertisement, right? So advertisement to drawings. Goods were contributed to Child Welfare Trust at free of cost. Again, donation, right? This is donation. And B is contributed, right? For advertisement, promotional purpose, and owner is taken over. So drawings. So all these things are going to be now debited and it is going to be credited from the purchase account. I hope so you could understand. All these journal entries were already seen in detail while discussing the journal entry chapter. You refer my journal entry collections. Almost I have 105 journal entries. And all these 105 journal entries are totally different varieties and it covers almost all the varieties of transactions. Even you can expect in your practical life as well as even up to final, those final examinations of your professional examination, you can use those journal entry as the base. So those things only are available here also. Here for the drawings, the entry will be drawings account debit, and sample advertisement account debit, and welfare is donation, so donation account debit. I pass the combined entry here. The drawings account here being 50, advertisement being 25, donation being 25, two purchases, the value being 100 rupees. We have now passed all the journal entries. I hope so you could now understand all this part. Do you have any doubts here? So I have passed the journal entry for all the adjustments. Now you have to prepare the prepare the profit and loss, trading and profit and loss account as well as the balance sheet comfortably. There will not be any hiccup. If you have any doubt, you can post me, else I will move on to the preparation of the trading and P&L account and balance sheet. Is it okay? Come on, copy this and let me know. If it is okay, then I will move on to the now. I'll open the trading and P&L account as well as the balance sheet now. Okay, wait. So trading account and P&L account and balance sheet. Okay, I'll just draw the lines here. Okay, here. Now, trading and P&L account. Trading and P&L account. I hope so you are able to see this clear. And the balance sheet. Balance sheet. Okay. Okay. Now, I'll post the items available in the trading and P&L account trial balance here one by one, subject to some other adjustments. First of all, let me finish up those adjustments here. Here, P&L account, trading account, it will be directly posted. Right. Outstanding insurance claim and insurance claim will be posted later. Sales is going to be subtracted, so minus 300. Debtors is in the credit side. Usually debtors in the debit side, as it is in the credit side, it should be subtracted to that extent. And stock with customers and trading account, we can post it directly later. Manager's commission, outstanding manager's commission is not already available in the trial balance, so I will post that later. And drawings, advertisement, donations. Drawings, advertisements, donation. Is there any advertisements available? No. Donations, no. And drawings, let us check whether is there any drawings available. Yeah, of course, here 1000 rupees is there. Apart from that, another 50 rupees worth of stock taken over. So I post that here. I'm adding that. Advertisement and donation can be directly posted in the trading and P&L account. And purchases in the credit side, usually purchases in the debit side, as the total value here in the credit side, it should be subtracted from the purchase account. Right. 100 rupees is going to be subtracted. Clear? And all these items, those items I put tick in the adjustments are could be adjusted directly from the items available in the trial balance while posting that in the trading and P&L account. But when it comes for those items having no tick mark, could be posted directly later in the trading and P&L account and balance sheet. As such, now with the available information, I am going to post each and every aspect one by one here. Right. Now, first part is purchases. Purchases 3000 where 100 rupees is subtracted. So the net of that will be, okay, two purchases. The value being 2900. As already I have marked 100 rupees should be subtracted, I subtracted and posted the value. Carriage inward, come on, you can text me where it can be posted. Carriage inward, where will it come? Carriage in will come in the trading account. Okay, the value being 1000. Is it okay? Administration, selling and distribution, up to factory, the expenses are debited in the trading account, and the rest of the expenses will go to the P&L account. So admin expenses will go to the P&L account. The last class itself we have seen in detail. So I am posting the second half. Usually we don't prepare Trading account and P&L account separately. We are naming it collectively, but while posting, the first part will be trading account, the second part will be for P&L account. That's how we'll post here. Here admin expenses account is there. Admin expenses. Actually 600 rupees, we have no adjustments. I directly post here. Selling expenses 1200. Of course, I don't have any adjustments here. So I'll post here 1200 rupees. Debit side of the P&L account. Fixed assets, where will it come? Come on, fixed assets means it's a part of the asset, so it will be recorded on the asset side. In balance sheet, left hand side is the liability side. Okay, this is liabilities. Clear? Liabilities. And here this is asset side. Is it okay? Now come on, tell me, the fixed assets will come where? This will come in the balance sheet asset side. So fixed assets, I just put FA representing fixed assets. Is it clear? Come on, I expect your answers also. Tell me, 12% investment, where will it come? Where will it come? Come on, message me. Yes. Yes, I don't know why you are keeping silence. Yes, come on. Okay. Okay, is it audible now? Yeah, I'll be proceeding now. Debtors. 12% investment is also an asset, so I put the value in the asset side. Investments, 12% investment. The prefix represents the interest eligibility for this. Okay, 2000 rupees. And then debtors, we have an adjustment where 300 rupees will be subtracted from 2000 rupees. After that, the debtors being asset is posted here. Clear? How much is that? Out of 2000, 300 should be subtracted. So now the balance will be 1700. Is it okay? Come on, tell me where the cash will come. Come on, make it faster. Cash will come. Yes, asset side. Yeah, so cash will come in the asset side. The value being 1000 rupees. 1000 rupees. So we first finish up recording and posting the debit sides and closing stock. If the closing stock comes in the trial balance, double entry is over for that. It means hereafter the closing stock will be posted only in the asset side. So I'm going to post the value here. Closing stock or stock. Usually we don't call that as a closing stock in the balance sheet. It's only stock. Okay. Stock value being 3000. And then drawings. Drawings should be subtracted from the capital, but 1000 rupees is the drawings and one more adjustment is there 50. That should also be now deducted. So I'll just post the value in the liability side as capital. From the capital, drawings should be subtracted. Drawings here being 1000 plus 50, 1050. I added another 50 rupees because of the adjustment also. Advance administration expenses. Whenever the nominal account having some prefix and suffix, it becomes representative personal account. The representative personal account will come in the balance sheet. Advance administration expenses means you have paid the administration expenses in advance. Now you can enjoy in the next period also without any payment. So you have some benefits in the future. Without payment means it's an asset. I'll put the value. Usually debit side will come only in the either asset side or debit side of the trading and P&L account. Is it okay? In simple thing, you can keep it in your mind. Or in the drawings, in the case of drawings, you are writing that value in the liability side. It means it's not right. It is not going to be written in the liability side. It's subtracted from the liability side. Subtracting in the liability side is nothing but recording the asset side. Is it clear? So advance administration expenses is an asset. Outstanding is a liability. It's an advance. So it should be recorded in the asset side. I will write the value here. Advance admin expenses. Admin expenses. The value being 400. The value being 400. And then commission receivable, income receivable, asset. Debit side will only come in the asset side. So commission receivable, okay. Commission receivable, the value being 100. And then interest on loan. Interest on loan is a expenses, so it should be debited in the P&L account. I'll just post that in the P&L account. I just shift here or there, no problem. I will show all the pages finally for your copying purpose. Now, interest on loan. Interest on loan. The value being 100. And then outstanding interest on investment. Outstanding is the representative personal account. It will come only in the balance sheet. That too, if it is in the asset side, debit side, it will go to the asset side. Asset side. Outstanding interest on investment. Investment is your asset. For that, you have to receive the money. As it is supposed to be receivable later, you are owning this benefit. So it will come in the asset side. Outstanding interest on investment. Interest on investment. Clear? The value being 140. Interest on capital is the expenses to be debited. So I am going to debit that interest on capital here. Interest on loan debited. Similarly, interest on capital is also be debited. Okay. The value here being 360. Then we have depreciation is also an expenses. So because of the usage of the assets, the value of the asset has gone down, which is called depreciation, is also debited. So I have completed the posting of the debit side. Now I am moving to the credit side. So credit side will, the items available in the credit side will go to the credit side of the trading and P&L account or in the balance sheet liability side. You just keep that in your mind. Now let us start with the first part, which is sales. So in sales, 7,000 rupees is there and there is a negative value supposed to be adjusted. After that, it's 6,700 only. In the credit side of the trading account, I am going to post the value as sales, by sales. The value being 6,700. And capital is a liability. I just post that value in the liability side. Okay, here already I have just written. So I'm going to subtract the drawings from this capital. So I write the value here 6,335. So I have posted the sales as well as capital. And then 10% loan. Better leave 2 or 3 lines under capital because net profit, if any, will be added. In the case of loss, should be subtracted. So I'll keep it pending for adding and deducting any profit and loss arises. So I am now writing the 10% loan after some line. The value being 4,000 rupees. The value being 4,000 rupees. And creditors is also a liability. I will write the value in the liability side. The value being 1,000 rupees. Commission income. Income. Clearly it is stated as income. Income should come in the trading and P&L account, especially P&L account, because only the sale will come in the credit side of the trading account most of the cases. So all other income will come in the P&L account only. So I am writing here commission income. The value being 600 rupees. And the next one will be rent income. Also income. I will post that here. Rent income. Rent income. The value being 200. The value being 200. Interest on investment, also an income, because you have invested, for that you are getting the interest. So interest on investment. The value being 240. 240. Outstanding selling expenses. So outstanding selling expenses is a representative personal account, and it is being outstanding, it will come in the liability side of the balance sheet. So I will write here outstanding selling expenses. Selling expenses being 200 rupees. And rent received in advance. Rent received in advance. If you are receiving the rent in advance, now you are committed. You are owing to them to provide the property. So representative personal account will come in the liability side. So advance rent. Rent received in advance. Rent in advance. Rent received in advance. Okay. So the value being 200 rupees. Apart from that, we have outstanding interest on loan. Outstanding interest on loan should also come here. Liability side. We are liable. Outstanding interest on loan. Is it okay? The value being 100. And interest on drawings. Income. Interest on capital and the loan being the expenses, and the drawings is income. So as the owner has given the money, company has to give them some benefit, which is called interest on loan and interest on capital. If owner has taken, he has to pay something to the company. It's an income for them. So interest on drawings is an income. So interest on drawings. I'll put the value in the credit side. So 25. I have posted all this value here. Now adjustments were already, entries were passed. Now I have to incorporate those things only. Okay. Already these entries were passed. I'm going to incorporate. So now see here. One second. Yeah. So first one, P&L account debit, trading account credit. So here in trading account, I'm going to write this as profit and loss account 500. Second part will be the profit and loss account. Second part, here it is profit and loss account, right? In profit and loss account, I will write here being to trading account. Is it clear? This is how the abnormal loss will be posted. So these two were not ticked, means it is not adjusted in the accounts available with the trial balance. So I am posting those values here. Clear? Similarly, outstanding insurance claim amount recoverable, as it's a debit, we own, it will come in the asset side. I will post that value in the asset side. Outstanding insurance claim. Insurance claim. Okay, it's a gain for us. The value being 400 rupees. Will be receivable later. And insurance claim is in the credit side. Will go to your P&L accounts credit side as it's an income for you. So insurance claim. Clear? This value being 400 rupees. And stock with customer. Stock with customer will come in the credit side of the trading account. So stock with customer. Value rupees 250. And then already we have stock which is available in godown. Now the stock with the customer is also be added with that. So if he fails to accept or approve, we have to take it back. If we take it back, it will be addable with the stocks available in the godown. So you can either add with the stock or you can keep it separately in a new account called stock with customer. Here the value being 250. Is it okay? Then in trading account also we have posted, and we have posted in balance sheet asset side also. Both is over. Manager's commission. I have to write here manager's commission expenses. I am not aware about the expenses as such now, so keep it pending. And outstanding manager's commission should be posted in the liability side as we are supposed to pay later. So outstanding manager's commission. Okay, manager's commission. Okay, the value being supposed to be calculated. Now drawings posted, advertisement still pending, donation still pending. These two are going to be debited here in P&L account. Advertisement. Okay. Once again, I'll keep the manager's commission lost because I have to get the value here. Yes. Now advertisement value being 25, donation being 25, and the purchases and all the other things were posted. So now what happened? No, the items available in the trial balance is posted. Apart from that, the adjustment items were having no tick. No tick means those items could not be adjustable with the existing accounts of the trial balance and will be now posted subsequently. We have done this. Now I'm going to tally the trading and P&L account and the balance sheet also one by one. As there is one part to be completed, which is nothing but manager's commission. So leaving that, all the things are usual ones. So I'm going to tally the first part here. Okay. So here on tallying this trading account, I will be getting the balance of how much? Come on, tell me. 6,700 plus 500 plus 250. What is the value you are getting? 7,450. I think so. 7,450. 7,450. Here you will be getting the gross profit. The gross profit being 3,550. Is it okay? Verify that. And this gross profit is transferable to the P&L account. So gross profit 3,550. And if I tally this, I will be getting the net profit. But of course, manager's commission is also pending. As manager's commission is also pending, I am not able to get the net profit, but roughly I am going to tally. If I tally it in a rough manner, I will be getting what? A total amount of these two put together. I will get both the value put together, right? Come on. Find out the balance in the credit side. 3,550 addable with the 600, 200, 240, 25, 400. Summation of all this value being 5,015. 5,015. Okay. If you subtract these items from this 5,015, you will be getting the balance value. Balance value is for manager's commission portion as well as net profit both put together. So the balance here being, I think so, come on, one, it is 2005. This is 2005, I think so. 2005. Is it okay? 600 plus 1200 plus 100 plus 360 plus 200 and 500, 25, 25. If you subtract all this from 5015, you will be getting value of rupees 2005. Now let me get back to this. Manager is entitled for a commission of 10% on profit after charging such commission. Assume that net profit is there and commission is also subtracted. This is net profit before commission. Okay, after that I am subtracting the commission, and whatever the thing balance is there, which is called net profit after commission. Here the statement is very clear. Manager is entitled for a commission of 10%. It means manager's commission is 10%. And on what? On what? Whatever it may be, after on, that term is the base. On profit after charging such commission. Profit after charging such commission. That base should always be 100. The base is 100. So commission, 10% commission on net profit after such commission. It means that 10% is nothing but 10 by 100. Whatever the thing comes after on, okay, this is the base, this is the numerator. This is the numerator, this is the denominator. Similarly, 10 is the numerator value, 100 is the denominator value. Now I am going to put the same here. So here net profit after commission is the 100 value, which is the denominator. So this will be equivalent to the denominator value. Okay, one second. So this will be the denominator value. I will just write here 100 and commission is 10. Then net profit. From the net profit before commission, commission is subtracted to arrive this one. Right. So from this it is very clear. From this 10 is deducted to get this one. Then net profit before commission should be 110. Now the value what you arrived here 2005 is net profit before commission. Otherwise 2005 is here. Now we have to find out the commission here. Commission can be found out using the cross multiplication. 2005 into 10 by 110. That's how we'll be getting the value. So now we arrived that value. Is it clear? I hope so you could understand. Okay. So this value being 182. Yes or no? Of course, I'm happy seeing you answering me. I hope so you could now understand this part also. Now the manager's commission here, I'm going to fill the value here. 182, 182. The items are going to be posted here also. 182 for manager's commission and outstanding manager's commission also 182. Now after that, final value being the net profit. From 2005, 182 manager's commission is subtracted to find out the net profit after commission. The net profit after commission will be 1823. 1823, which is nothing but 182 is subtracted from 2005. Is it okay? Now this 1823 will go to the balance sheet and will be addable with the owner's fund. So I'm going to add here net profit 1823. Okay, if I add, drawings is subtracted, net profit is added. If I do so, the ultimate balance of the owner by the year end will be 7108. Yeah, come on, finish up totaling it up. I hope so it will be getting tallied. So 7108, 4000, 1000, 200, 200, 100, 182. The total of the liability side is 12,790 and total of the asset side is 12,790. It's also getting tallied. Is it clear? I hope so you could now understand easily.